Hi, fellow traders. What's happening? Well, it looks like I won't be getting a trade off today. This morning was could not find a good clean look, and I was patient, waited, came in after lunch, had sniped this setup, but it was on short sale restriction, and right when it hit my my trigger, it just kind of washed out. Never came back so that I could get in. On those you got to get in on an uptick. I wasn't chasing it down. So, so be it. Just not a good day today to trade. It looks like yesterday was just as bad. But Monday we had a really good day. Tuesday, not so much. I just kind of crapped all over my Tuesday, and it was self-inflicted. I think there was some money-making opportunities in the market Tuesday, but self-inflicted for me. And then this morning, I'm doing like I normally do. Gonna put my stop in on UPS, the trade that I've been swinging. And what happened? The market snuck up on me. I wasn't really paying attention. The bell rang, and I'm like, oh shit, I'm not even ready. And so the first thing I do, I'm going to put the stop in on the swing trade because I'm worried it might wash out today. So I need to get that in. And did not do a stop. I did a regular limit order. And if you don't put in a stop, if you put the limit order in, a sell order in below the price, it's going to automatically fill, and that's what happened. So I took myself out of the damn trade by mistake. Still made some money on it, but could have given, I don't know. It's still yet to be determined how much I actually gave up on this trade by, accidentally closing it out too early. But, I know what happened, and I'm going to stop, like, answering emails at 9 o'clock. I'm not looking at any more emails. I'm not worrying about anything else. I'm going to focus because that was my problem, trying to help somebody that couldn't get in and in the emails, and lost focus and kind of messed my morning up. So I'm not doing that anymore. It's all my fault. I made the decision to go ahead and do all that stuff, so I'm not going to do that anymore. So I've already kind of fixed that. But going into Friday, pretty much all cash. Unless something happens after market here in earnings, I'll be going in all cash on Friday, and will only probably be looking at day trades. Won't be looking to enter any new swing trades on Friday, especially going into a long weekend. That's just not ideal. So swing account, I plan on going in all cash. I'm already all cash, so not really going to jump in any new trades tomorrow. And we'll see if we can get a good day trade off. I mean, another good solid day trading day will make up for Tuesday, Wednesday, and today. It will. So just looking forward to that. But because I don't have any recap or anything, this is a perfect time for me to do one of these classes that I promised to do. And this is answering a question I get a lot. And a lot of people ask me, what am I talking about when I'm thinking in probabilities? Now, a lot of times I send them, I always send them the video link for Mark Douglas and what he says about it. But I've been invited to speak with several private day trading groups around the country. There's one right here in Columbia, but there are others that where friends get together and they just start like a little trading group, an investing group, and they'll invite people that they find that they may find interesting to talk to them and all of that. And it's really, really fun. I didn't think it would be as fun as it was, but so all of them ironically asked me to talk about this thinking in probabilities, because this is actually If there was ever a secret to trading success, this is it. Because you don't hear too many people talk about it. Some may talk about it in different ways and may present it differently. Early on, I never presented it as thinking in probabilities. But I realized maybe I need to call it what it is. Call an apple and, explain it from there. Because probabilities to me always scared me because I didn't like math. And I ran away from that class. But it's really, once I confronted it, it really made a whole lot of sense to me. So I kind of put it together the average Joe way, so to speak. It's like the average person should be able to understand what I'm saying because I'm simple-minded, and most people who are simple-minded like me can understand it. So that's what we're going to get into today. But real quick, I wanted to remind you guys about the special I'm giving you, or the deal I'm giving you on the Roadmap series. Now, this is a 6-month membership, all access to all of the classes, not just the Roadmap classes, all of them. We just started the swing trading class for this year. So we're doing that. And those videos are going to be updated as we do the class. So you get access to all of that. Plus, one-on-one mentoring with me. You get an hour of one-on-one time a month. You can use it however you want to. 2 30 minutes, 4 15 minutes, or 1 60 minutes, whatever you need. And the way I have things laid out, I'm so confident that if you do everything that you're supposed to do and take advantage of everything that I'm giving you, in 6 months, you're going to be a consistently profitable trader. Now, I'm not saying you're going to make $5,000 a month at that point. It just depends on where your account is and how much you're trading or what your share size is. But you will be a consistently profitable trader. You will have the right mindset going forward to continue to grow. And if it's your desire, make a living trading. And I'm confident in that if you don't get there in 6 months, I'm going to give you another 6 months and kind of ramp up me helping you. Try to pinpoint those things that are still holding you back and give you that much more attention these next 6 months so that you can get there. So, all you have to do is do the work, and it's going to be there, and I'm going to be there with you. But a couple of more days, it's my birthday special. After my after a couple days, it's gone. We're just going to be back to normal. So if you have any questions, just shoot me an email, ed@AverageJoeTrader.com, or all you got to do is go to AverageJoeTrader.com. You will see it right there where to sign up. It'll hit you in the face. All right. So what is thinking in probabilities? And to me, this is my definition. Centered around trading. It's the belief that one outcome is going to happen more than another outcome over a period of time. And the key is underlining over time. It's not going to happen. We're not looking at it daily or a couple of days. It's over time that something is going to happen more than another thing. So I feel that there are two types of probabilistic thinking. Now, I see something called random probability. That mindset is what I see most traders, most new traders, most intermediate, most inexperienced traders develop, because it's not so much that they develop it, it's already in them. This is what we bring into trading. This is some of that baggage that I talk about that we bring into trading. So over a period of time, you learn how to accept and really look for random positive results. Because and I use the scratch offs in the lottery as the best example. When you go in and you buy a scratch off, and let's say you buy 3 or 4 over the course of a couple of days, and you haven't won anything on it, then the 5th time you scratch it and you win like $25. But you haven't registered that you spent $50 over the last 5 days or last 3 days, and you just won $25. So you're happy about that. Let's say you take $5 and you put it in your pocket. You take that 20 and buy 2 more tickets. And let's say you get a break-even ticket or another $15 ticket. So you put 5 in your pocket, get 1 more ticket, and you lose on that. You're done. But guess what? You're happy because you've got $10 in your pocket and you've had some wins. So those random positive results, even though you lost money, you feel really good about it, and you're going to be willing to go do it again. And let's say you may get a $50 ticket or a $250 ticket. I mean, once you get that, you're hooked. That's what happens to traders when they come in. They may lose 5 or 6 times, and then they get this one big win. And they may think they know what they did to get it, and they may really feel that way. But in reality, they didn't. It just happened. But it feels really good. You might have lost $1,000 over the previous 5 days, but you get a $400 win, and you're jumping for joy. And you're looking for this to happen again at some point. And so you really get addicted to these random positive results. So really, over a period of time that you will hit a winning trade, or you will hit a winning trade. And all you want to do is try to hit a winning trade faster than you did the last time. But that's not the thought process that we want. We don't need that scratch off lottery mindset. We want to go in every trade with the possibility of taking money out of it. Now, is every trade gonna win? No. But most of our trades we should make money on if we do things the right way. And so the only way we can find out is that if we do the same thing over and over and over again. If we think in probabilities, that would allow us to see, hey, if I do this same setup every day in the market on whatever stock set up, I'll have some type of an edge, and my results are going to be, I'm going to make consistent money over a period of time. I may not make money today. I may make money 2 days, and then I may not make money the 3rd day. And that's one of the feedbacks that I get is like, how can you say you're a consistently profitable trader when you constantly take losses? That's all part of the game. It's all part of the game. Either the strategy is going to fail, but I guarantee you we're going to make mistakes in our execution more so than the strategies fail. So a lot of the losses are going to be on us. It's not going to be that the strategy just didn't work. It's going to be that we messed up somewhere and we ended up losing on it. So what we need to do is focus on doing the same thing every day, trading the same strategy, executing it the same, and then at the end of the week, at the end of the month, we're going to have money in the bank. That's what I do every week. That's what you you guys that are in chat, you witness me do this every day, every week, every month for the last several years. Even when I was at Warrior Trading, before they stopped me from streaming live, you guys would see me do it every day. So it works, and it's what professional traders do. These guys that are trading other people's money, they could care less. So they're already trading from somewhat of a carefree mindset. And they know that if they just execute the same every day, if they have a legit strategy, they're going to make money. And that's all that matters. It's not about how many wins did they get versus how many losses. They just execute the strategy. Some are told what strategy to execute and how to do it. So, it makes it's a little different for them. But what I want to share with you guys is this is the results from the last class that I did. And I do something called the I'm getting too far ahead of myself. So how do we get these consistent positive results? Probably because I was talking too much. So we get them. Number one, we got to have a viable strategy. All right, which we talked about. Doesn't matter what it is. For me, it's opening range breakout, trend continuation, reversals. That's it. Now, every now and then I'll throw in a news play, or in another account I may play around with some fundamentals where I'm trading fundamentals, and it may not just be a day trade, it may be 2 or 3 days. But whatever the case is, I have a strategy. And the strategies that you see me trade every day are the 3 that I mentioned. And they're viable, they work. You see that. You see me execute them over a period of time, and I'm profitable with them. You have to define your risk. Make sure you know how much you're going to risk every trade. Don't think about it once you're in it and then say, well, you know what? I'm just going to give it another couple $100 because, I just need to see if it's going to work. No, that has to be decided ahead of time. If you try to make changes after the fact, it's not going to happen. Execute the strategy consistently. You have to be consistent in your execution. You can't hesitate when the trade triggers. You got to enter it without thought. Put your profit targets in, your stop in, you know where all that is. All of that should be defined before you enter the trade. And all of these are things we work on in the classes and what we demonstrate every day. We're not going to make a move unless we have a strategy, that we've defined our risk, that we have a trade plan that we can execute consistently. And one of the strategies that we start with, the opening range strategy, there's an exercise at the beginning of the Roadmap to Success series that helps put you instantly into the right mindset. So if you can't execute that exercise, you do not need to go any further in your trading, because if you do, it's a train wreck waiting to happen. You have got to have the right mindset. You've got to be able to execute without question. And if you can't do that, it's going to be difficult to move forward and to start making money. All right, so what I have is a coin flip experiment. And I got this from Mark Douglas, and I just took that idea and kind of made it mine. Came up with a little exercise. We have a lot of fun doing it. And it's a coin flip experiment. Now, let me preface this by saying this experiment pretty much gives you a good feel for how the market works. Believe it or not, because the market has consistent patterns that show up every day, regardless. They show up. The outcomes are random. All right? So keep that in mind as we go through this. So here I have a weighted coin. I have one heads, one tails, and then a standard coin. I break them up into 3 groups. But we're just going to focus on the heads today. So I have one person to flip a coin in the same position each time. So that person is all he's gonna do through this whole experiment is to flip the coin the same, flipping it in the same position and everything. So one person volunteers to choose heads every time. One person volunteers to choose tails every time. One person is gonna pick randomly, trying to guess what the flip's gonna be every time. This is the type. Now, the person that chooses heads, because the coin's weighted in heads, his strategy is the head strategy. So, he has an edge. That's the same type edge that we have with our strategy in the market. Our strategy gives us an edge, or it should. If it doesn't, then we need to find a new strategy. Now, the person that chooses tails every time, this is the guy that may have the strategy, but makes mistakes in execution. He either misses the entry, chases, gets stopped out, changes his stop, all the mistakes you could make. So what it does is it makes him on the tail end. So he's at the mercy of the market and the people who have the strategy. And then you got one person that's going to try and guess what the next flip is. These are the people who go from room to room to room trying to find the person that's hot that day and follow what they're doing. That's this person. And you know that is the dumbest thing I've ever heard or I've ever seen and heard from somebody telling me that. But that's the random person who hasn't picked a spot yet and just keeps chasing his tail, going from this place to that place or whatever. So the risk, $10, reward 20, meaning whenever you lose $10. Whenever you win 20 bucks. That's the way I have it set up. So here's the first 100 flip lot. And each 100 flip lot represents 1 week of trading. So I know most of us aren't going to trade 100 times in a week. We may have 100 tickets, but we didn't make 100 round trip trades. All right. So, but these represent 100 round trip trades. So the heads position, it flipped heads 70 times and tails 30 times. So if he made $20 per every flip that he won, that he was right on, and he lost $10 on every one that he was wrong on, he ended up with $1,100. So the tails guy, he ended up losing $100. He was still right 30 times, but he was wrong 70, so he ended up losing $100. Now the random guy, he's feeling pretty good. He picked 45 right out of 100, so he made $350. He's happy now, and I'm telling you, the reaction to that these guys had in this group. The tails guy was a little down, but he's okay. He only lost $100. The random guy is like feeling pretty good now because he guessed 45 right. $350 in the bank. He's good to go. So what do you think happened this next time around? Because look at the random guy. He only got 28 right. What happened to him? Same thing that happens to us when we get a winning trade or two, and we think we're invincible. We think we know what the hell we're doing, so we're gonna just get loose. So he got loose and he only got 28 right. He got less right than the person who was picking tails that has a definite losing strategy. He got less right than that person. So in this week, the coin landed on heads only 67 times, 33 times it didn't. Heads position got $1,010 at the end of the week. Tails guy only lost 10 this time. All right, so he's actually starting to feel a little bit better because he's like, man, I'm not losing a whole lot of money. This guy guessing lost 160. All right, so let's get to the next lot of 100. So the coin flips on heads 72 times, landed on heads 72 times, tails 28 times. So the heads position, he's still rolling. This is his strategy. He's executing it the same. All he's doing is calling heads. He don't have to do anything else. So that's a perfect execution. Ended up with $1,160 this week. Tails guy, oh, he sucked this time. He's going backwards. He's not happy. $160 in the hole. Because it landed on tails only 28. It landed on tails only 28 times. So now he's wanting to change. What do you think he wants to do? He wants to call heads every time. The random guy, he's getting to the point where he wants to call heads every time. But let me tell you, here's a true fact, disclaimer, whatever you want to call it. The random person has a better chance of having 100% right than the guy on tails and the guy on heads. Because he has the autonomy to pick the flips. So does he have the ability to guess right every time? Yeah, there's a chance that he could get every flip right. And that's what's keeping him on a random tip. He's seeing unlimited possibilities. The possibility to nail 100% of these. That's keeping him going. Even though he's getting these ridiculous random results. He's thinking that he's going to be able to find something that's going to get him closer to 100. And that's the mindset. So you see what happened this time. The tails position lost $160. The random position is still going in the wrong direction. He only called it right 26 times. He's trying to find patterns. If he was smart, he would pick heads most of the time. Right? Wouldn't you think if after a while you're random and you're seeing that heads are coming more often than not, you can make that adjustment. But here again, he hasn't made it. All right, so here's the fourth week. And I wish I had stopped here because this would have really driven my point home. But the fourth week, the coin flipped on heads 73 times, tails 27. Heads position, a whopping $1,190. The tails guy, oh, he's not doing well. He's not happy. He's down $190. And then the random guy, down 70. He still hasn't righted the ship yet. But guess what he did? Guess what happened on this trip? What did he do? Halfway through or 2/3 through, he just started picking heads. Every time. He just started picking heads. So even though he wasn't forced to be random, he just had to choose whatever it was ahead of time. So he started choosing heads every time. And look, 51, he got it right 51 times. Because he started after like the 15th or maybe the 20th flip. He started. And so he ended up making $530 that week. The tails guy, he did a little bit better because guess what? The coin, this is one of those times where the coin did not meet its average. It actually went below average. And that happens. This is exactly what happens in the market. Exactly what happens to our strategy. Well, we may have a strategy and we execute that strategy and it's perfect, but the market is not receptive. Remember, the market is random. So the results we get are going to be random. And this guy, even though he had a strategy, like we have our strategy and we have our edge in the market, sometimes it doesn't work as well as others. And this grouping, it just did not work. For one, we don't know why. And it's not for us to try to figure out why. We just execute. So this time he only made $890. Even the tails guy got in on the green. He got $110. Guess what? This dude's happy. He's happy. But what is that? What type of probability is that? That's the random. He's getting hooked on that random probability. And that's not going to work. Then the random guy, he's got it figured out. He's like, if we were going to do it again, he would pick heads every time. That means he's learned this strategy. He knows being consistent works, that it's better. He may have the opportunity to make more money by guessing, but it's a lot harder than just picking heads every time and winning. So by now, everybody knew it was the fifth time it was a weighted coin. After the fourth time, people started to think, yeah, this is probably a weighted coin. That's why doing it 5 times was it. After that, then the random guy is going to pick heads every time. And then the tails guy is going to realize there's no way I'm going to win. I've got to change my strategy. So actually, at that point, the experiment would have done its job, which it did, obviously. So, but just to look at how this all finished up, the heads position ended up making $5,350 over the 5 weeks, or the 5 drawings that they represent weeks. The tails guy only lost $350. He only lost $350 because he managed his risk. Even though he had a losing strategy, he didn't blow up because he managed his risk. So this is not only a testament for thinking in probabilities, but this is a testament for managing your risk. And the random guy ended up with only $430. But like I said, he knew after that he'll be ready to go. So let's take a look at what the equity curve looks like for each individual. Okay, for the heads position, that equity curve looks just like what we aim for every week. Exactly what we aim for every week. Consistent gains, consistent growth. Now look at the tails equity curve. Look at what this guy did. His just fell off, and then that last draw, we got a bump. But guess what? That's random. Will that happen the next 5 times? Probably not. So it may happen once in the next 5 times, but it's not going to, you're not going to get a bounce, or you're unlikely to get more of a bounce in the next couple of weeks. It's going to come back. And you can see the random equity curve. He was doing bad until he got that last one. And again, that last hit, he realized it's not about random. The reason why he started making money is because he picked the spot and he went with it. He had the autonomy to pick a spot, and he went with it. Now, the same identical thing happened in the group with tails. Now, the numbers weren't the same. Each 100 flip lot, the numbers were different. But at the end of the day, equity curves look pretty much the same, almost identical. And obviously, the other random ones, they never could figure out a pattern. And only one time did I have somebody in the random group pick the same thing every time. He kind of connected what I've been talking about, and he's like, well, I'm just going to pick the same thing every time. And he did the best. But that was only one group out of the 5 trading groups that I've talked to about this. Yeah, so I felt this was pretty interesting. And this would give you a better idea of how important it is to be consistent and understand that, and to think in probabilities and not worry about each individual day. That's why I don't have a daily goal. Why I don't have a weekly goal. My goal is to come in and trade and maximize that day. That's my goal. If I can do that, I'm going to be just fine. All right, so to sum all this up, what are the benefits of thinking in probabilities? Number one, you do not have to deal with these debilitating emotions. If you're thinking in probabilities, the fear, the greed, the being wrong, the losing money, all go out the window. You're not even worried about that anymore. You're able to, focus more on your execution, entering the trades when you're supposed to without question, detaching from the trade, and then accepting whatever the outcome of the trade is. Whether you win or lose, it doesn't matter. Just come back and trade again. And just know, over the course of a week, a month, you're going to put money in the bank. And if you put money in the bank every week, every quarter, your account's going to grow. You're going to close your eyes and open them up one day, and you're going to be knocking 25 grand. If you're under PDT, you'll be knocking 25 grand on the door. If you're over PDT, you'll be in that consistent realm where you're able to pull money out of the market consistently every week. And that's the goal. I know it's hard to not jump on trades. I know it's hard to not follow somebody that says that they did this, and you're like, oh man, you don't know whether they did it or not. You just don't. I had somebody, as 2 people were in the same room, somebody was posting a trade that one of the moderators in the other room was doing as their own in this room. So you can't, and who knows whether they were taking the moderator in the other room is trading live. They could just be calling stuff out. You don't know because you don't see it happening. But it is what it is. But if you can think in probabilities, if you can understand that you need to do the same thing day in and day out, allow your strategy to pay you over a period of time versus trying to pull money out every day, you're going to be in a lot better place. And your bank account is going to be a hell of a lot happier. All right, so that's all I got for today. I know it was a pretty intense lesson, but I felt I needed to do that to explain it all to you. So if you like it, if you think your friends and other people, other traders might, forward them the link. You know, I don't do any advertising, so if you think it's hot, send it out. Let these guys come and check it out and see if they like it, if you think it can help them. So you guys have a great night, a great evening, and I will catch you tomorrow.